Oh, no, 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 no. Oh, no, 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 no. Oh, no, 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 no. Not good. Not good. Not good. Not good. Not good. I know. Daddy's back is the coupon. Dating Daddy back. Holy smokers. Look, the government just shut down, and just seconds ago, I got the ADP number. It's terrible. Okay, we just got negative 32,000. Literally seconds ago, the expectation was 51,000. We got negative 32. Oh my gosh, the revision just came in. Oh, it's negative, but it's so bad. Okay. Last month, they told us on the ADP jobs report, which is the private payrolls jobs report, that we were at 54,000 jobs. They just revised it to -3. This month, we were expecting 51,000. They just revised it to -32,000. So both of the numbers are absolute hell. This is a terrible set of jobs data. And the crappy thing about it is we don't actually have an expectation that we're going to get a real jobs report this Friday because the government shut down. So this means now we're stuck with the private ADP report to trade off of. Okay, so I'm just verifying here, yeah? ADP National Employment Report shows U.S. employment decreased 32,000 private sector jobs in September. The consensus was for 50,000. Yeah, I'm reading this here on Reuters just to corroborate that I'm not losing my mind. Like, I'm looking at these numbers and I feel like this has to be a mistake. Like, somebody has to have done a fat finger oopsies or something. But that's what the numbers are coming in at now on all of the... Oh, there it is. On all the wire services, on everything, it's negative 32,000 with the prior revision down. ADP conducted its annual preliminary rebenching of national employment in September based on its full year 2024 results of the quarterly consensus employment and wages. Oh, so they applied the QCEW revisions. Interesting. The recalibration resulted in a reduction of 43,000 jobs in September compared to the benchmark data. The trend was unchanged. Job creation continued to lose momentum across most sectors. Okay, that's a little better that some of the data is the result of them trying to align with the QCEWs, which are the benchmark revisions that were just 900,000 from the Federal Reserve, from the Bureau of Labor Statistics. Keep in mind, we're supposed to be getting this jobs report on Friday, but we're not because the market is shut down. Not only are we not because the market is shut down, but Donald Trump was going to appoint somebody to the labor market who was going to stop doing quarterly wage reports at all, monthly payroll job reports at all. He was going to appoint somebody to this job that, basically waters down the data. But the crazy thing is, yesterday, White House pulled the nomination of E.J. Antoni to lead the BLS, throwing leadership of the BLS into further disarray. White House officials said that the administration is looking forward to a nomination of a new candidate after there were signs of Antoni's nomination faltering due to criticism from senators and economists. Well, yeah, because he was a dumb nut. He was like, oh, we should just stop, reporting jobs as often. Okay, so despite the strong economic growth we saw in the second quarter, this month release further validates what we've been seeing in this labor market, that U.S. employers have been cautious with hiring. Like, this is really weird. They're taking this very bearish tone. They're like, oh yeah, this further reiterates. Last month, they weren't this negative. And to me, it's also kind of mind-blowing that we're only down 48 basis points right now on the Qs because you've got the government shutdown and you got this terrible jobs report. Look at what's happening to the 10-year Treasury yield. The 10-year Treasury yield down 4.4 basis points. Big move. Gold up 39.11. Wow. Okay, let's keep going with the report here. This is crazy. Let's view the, let's see where the components are. Small business is lost. Medium business is lost. Big business is lost. The biggest business is gained. So only 500 plus gained. Okay. There is something to this. I believe that the biggest companies and the richest companies will be the biggest beneficiaries of artificial intelligence because they will get the most earnings per share that goes up to the top. Pretty crazy. So let's see. Change by industry. Mining up, construction down, manufacturing down. I thought tariffs were supposed to help this. I'm obviously being facetious. It's too early for this. Trade, transportation, and utilities down 7K. IT up 3K. Education and health services still up. Wow. But professional business services, financial activities down. Leisure, hospitality down. Wow. Other services down. Let's go to the actual report, which is their press release here. This is this is crap because usually when we get a bad ADP report, everybody just says, it's okay. Just wait 2 days and the fake news BLS data will come out and it'll tell us that everything is okay. And then 6 months later, it'll get revised down. Well, now because the federal government is shut down, we won't get the BLS report on Friday. The Bureau of Labor, now the Friday report is even more important and we won't get it because Trump got his shutdown. I really think Trump wanted the shutdown. I've said that over the last 3 days. He wants this shutdown. He wants to fire these people. So, despite the strong economic growth we saw in the second quarter, this month release further validates what we're seeing. Employers are cautious. Okay, pay insights. Pay gains were steady for job stayers. Little changed, 4.5%. Job changers slowed. Wow. That's a big drop in job changers. Usually when you change your job, post-COVID, you've really been able to pick up some extra money. That's starting to compress. And I wouldn't be surprised if this ends up turning negative at some point relative to job stayers. Like you lose money when you change your job. That's probably more likely in my opinion. The ones that are paying the most for staying, financial activities, and let's see. Large businesses are also paying the most. Oh, look who's paying the worst. 1 to 19 employees. The smallest firms. Makes sense. You're getting destroyed by higher rates. Not only are you getting destroyed by higher rates, but you're getting destroyed by, a slowing or softening economy. You're not, people keep referencing the Atlanta Fed GDP. And we have to recognize the Atlanta Fed GDP is heavily skewed by the AI CapEx build. That doesn't benefit all these small businesses that are hurting. House Hack's contributing to the CapEx. And we're small businesses, but I feel like we're a small business, but we're one of the fortunate ones. Got our AI product coming out next month. We're really excited about it. Maybe even late this month. We'll see. This recalibration resulted in a reduction of 43,000. This was the QCEW recalibration. The most recent release of the QCEW contained higher than normal number of missing redacted values for the establishment. This is calculated at coarser granularity than in prior years. So why are there more redacted values? Is Trump going in there with the black highlighter again? So the mission of the ADP, blah, 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 blah. Okay, so there it is. That's the ADP report. It's terrible. Part of it, though, again, is because they revised to match with the QCEW. Again, the recalibration led to a reduction of 43,000 in September. If you add that 43,000 back in, you would be at 32 negative plus 43. You'd be at 11. 11,000 without that QCEW revision is still way lower than the 54,000 that we were expecting. So we were expecting, again, 54,000. We got negative 32,000. So a really trashy ADP report here. We have, let's see what the doomers are saying. Private sector decreased 32,000 after a revised 3,000 decline a month earlier. ADP used the QCEW to recalibrate. Yeah, okay. They're not saying anything new. Let me see if there are any suit reactions here yet. Weak ADP confirms fear. Bonds rally. Okay, now things are getting more interesting. The ADP report showed a drop of 32,000 jobs, way below the expected rise of 51K, and the worst reading since March of 2023, the period of the mini banking crisis. As always, one needs to view this data with a grain of salt given the noise, but given this might be the best look at the real-time state of the labor market, it is natural that it should prompt a bond market reaction. Though, thus far, it has been smaller than one that an equivalent payroll figure read would get. Equities seem to be unperturbed by the potential growth consequences of a further labor market weakening, because, of course, they are. In other words, like, the stock market very frequently doesn't care about the labor market weakening. The stock market usually doesn't care until, what? Earnings go in the dumpster. When earnings go in the dumpster, wow, all of a sudden then the stock market really cares. But yeah, you can even see treasury yields now stabilizing a little bit at only down about 3.8 basis points. So here's my takeaway on this. Gold, though, still up another $5 now, 39.16. Also, another note here, a negative ADP report was a clear catalyst for traders to reconsider the possibility of an additional 2 interest rate cuts by the end of the year. This is the closest we've come to fully pricing in 2 rate cuts since the September FOMC meeting, where Powell stressed the committee's data dependence. Now that the data is affirming weakness in the labor market, traders appear to be putting more stock in the guidance for 2 rate cuts by the end of the month, or by the end of the year, rather. Okay, so here's my take on this. This is going to take some time for markets to digest. The reason for that is simple. A lot of people are looking at this government shutdown, and typically, I should say, almost always, and we studied this yesterday, almost always, these situations, government shutdowns, create uncertainty that result in buy the dip opportunities. They are almost always buy the dip opportunities. So there is a good likelihood that people are looking for those buy the dip opportunities right now. Totally reasonable. And so that could prop up stocks a bit. Unfortunately, until we get the actual labor report, we might not have any kind of corroboration in that soft landing we're looking for. That's why this jobs report was so critical, because so many people are like, look, 3-month unemployment is growing at 29,000 jobs. 4-month employment's growing at like 35,000 jobs. We have a really big slowdown of trend. Is this slowdown suddenly going to stop, or are we going to keep going? And this was going to be the report that would tell us, okay, the pain is stopping. Remember this from yesterday? This is that ratio of job openings to unemployed. We're below 1. We need it to magically stop at this orange line. Otherwise, we are going to fall into recession. Unfortunately, again, we don't have the actual labor report because the government shut down. And it's likely that we're not going to see that labor report until Congress gets their act together. These are the reactions of prior shutdowns. Prior reactions, you tend to see the S&P 500 higher. You tend to see treasury yields lower, and you tend to see the dollar lower. This is not a surprise. Okay, Mike Johnson is now reporting. The government shutdown. We are looking for a breakthrough today. However, this can be an opportunity to downsize and restructure the size of government. This is a reference to big layoffs coming from Donald Trump. Remember, Donald Trump warned us yesterday. He said, look, if Democrats end up instituting a shutdown, we will have an opportunity to do things we couldn't otherwise do. The rationale here is Donald Trump is basically going to do what the Office of Personnel Management said. And they're going to say, if you are a federal government agency that through this shutdown is not getting funded, do not come back and expect to spend that money. Expect to cut that money. So use the shutdown as an opportunity to say, we're done with this. And then when we're done, you're going to fire a bunch of people. Permanent layoffs. This is not Donald Trump looking for temporary one-off layoffs. This is Donald Trump looking to seize on the opportunity of a government shutdown to fulfill the Project 2025 mission of Mr. Vote. And he's going to fire people like crazy and bring hell upon people in the federal government. Vote wants federal government people to shake in their boots, employees. And there are a lot of people who agree with that. There are a lot of people who say, look, quote unquote, maybe I'm a conservative and I want to see a smaller government. That's what happens here. Smaller government. Okay, let's look at ADP report. I want to see if there are any reactions from Suits, but this is not great. This is pretty trash. Okay, let's see what people are saying. No wonder why they want to stop the jobs reports. That's a good one. I always love that kind of stuff. Somebody goes, I thought there was a government shutdown. Why are they still reporting? Again, these are the private payrolls numbers. ADP is a private payrolls company that issues, payroll. And so they can track their, the people that work with their systems. And they've got hundreds of thousands of let's see, how many payrolls does ADP process? I don't know. 40 million. ADP processes payroll for 40 million Americans. So it's a private company. Okay. Then what else here? Somebody on X writes, ADP negative 32,000 jobs. Head of ADP about to get fired by the president. LOL. That's a good one. I quote tweeted that. That's great. So it's a private. The joke is it's a private entity. It's bad data, so of course Donald Trump's gonna want to fire them. But it's a private company, so he can't. He can only call for the firing of, like he did with Microsoft. Remember, after Microsoft cut off Microsoft Azure for Israel, all of a sudden Trump wants to fire the director of national, intelligence or national, diplomacy or whatever it was over at Microsoft. It's crazy. Dollar falling. So that actually should mean U up would be going down. U up. Let's see. Yeah, U up is going down. In case you're not familiar, this is an ETF proxy for the dollar. And so when you look up the ticker U up, you want to make the bullish bet. You could also look at U down, which is, can you guess it? The one that goes up when the dollar goes down. So not a surprise. You've got some of the real estate companies going up here in pre-market. You've got the tech trades slowing down a bit, the Qs slowing down, not much. 48 basis points. This is honestly relatively benign in the face of a very bad jobs report, ADP jobs report, and in the face of a government shutdown. This is not bad. Ethereum is not reacting at all, does not care one iota. Bitcoin cares a little, but only by rejecting, to the tune of about $380 off of 117. So it's pretty relaxed reactions. I would actually argue that if Friday rolls around and we do not get the actual jobs report from the Bureau of Labor Statistics, which we don't expect that we will, then we're probably going to highlight more of this pain. In other words, you'll see more of a market reaction function over the next few days because people go, oh, ADP, we usually don't trade off that. Wait, what? We're not going to have a BLS report this Friday? I actually think people are going to wake up to this on Friday and be like, wait, where's the regular jobs report? Oh, There's no jobs report. Well, what did ADP say? Oh my gosh. So we'll probably have a bleed, honestly, until the shutdown's over. Again, usually jobs reports or government shutdowns are great by the dip opportunity. But now, remember what I've said over the last few days, unless we're in a jobs recession, this ADP report is trash. So it's really going to leave us some reconciling to do. And then, of course, what we always do is we put together our game plan in the Meet Kevin Alpha report. So that's what we're going to go do in just a moment. We're gonna jump over to the Meet Kevin Alpha report, which, remember, you get the Meet Kevin Alpha report every day before the market opens. You get all my trade alerts. You'll know when I'm buying my top 10 stocks to buy for the next 10 years. You'll know when I'm selling NVIDIA, which I've got a crap load of NVIDIA and I'm waiting to sell it. You'll get all of the 8 courses. You'll get the new lectures coming out soon on, dude, a huge set of tax saving strategies are coming out. My goal is for you to join this course, get lifetime access, and I want you to feel like I paid zero for that course. I made so much money. That's what I want you to feel like. So, obviously I can't guarantee it, but people take a tax write-off when they join. And remember, you get everything. The Meet Kevin membership with coupon code Daddy's Back, you get every single course. So you get the stocks course, you get the real estate investing course, the real estate sales course, which works really well for just salespeople as well. So even if you're in sales but you're not a real estate agent, you should watch it. Do-it-yourself property management course, the YouTube social media course, the productivity course, the Trumponomics course, where we got a huge set of new lectures coming out. The wealth plan library, which was actual financial advice, recordings that I did for folks. So pretty remarkable. Here goes. So all of that's at meetkevin.com. Use coupon code Daddy's Back. It's supposed to expire Friday with the jobs report. So we'll go to like a recession, and then people will be like, "Oh crap!" So we'll have to raise the price. Anyway, so jobs data, absolutely trash this morning, and not terribly much of a reaction function, except for all of a sudden, we now have a Reddit update. Look at this. Reddit now dunking off of my 230 line. It's almost like Section 232 tariffs. And what the report apparently is that we're getting here is that Reddit falls due to weakness tied to tariff impact from AI. I don't know what the hell that means. Tariff impact from AI. I feel like... Reddit, you have to think about it, to some extent is like a search engine, right? I mean, a lot of people go to Reddit, especially on the margin, not to sit there on a discussion board every day, but to collect an answer to a question. And now, honestly, I mean, so many AI are trained on this. It's crazy, including Reddit. By the way, my little banner here, because these lines here are on Webull, what's really interesting is they just updated this. If you go to meetkevin.com/Webull now, this is crazy. Look at this. 4% match if you deposit over 100 grand. Now you have to leave the funding there for a while. But imagine this, if you sent them $1 million, you'd get 40 grand on a deposit match, or 3%. 3% if you have over $2,000. So if you had like a $50,000 retirement account at Fidelity, and you went to meetkevin.com/Webull and you transferred it over to the sponsor, you would get $1,500. Dude, this deposit match is huge, really incredible. So they really jacked this up. Now again, you got to leave it there. Like you can't like drop it in and then expect to leave right away. But that's reasonable. Robinhood does that as well. But okay, let's. I want to see if the Journal is saying anything, because I'm waiting for Nick T to wake up. I don't think Nick T's woken up yet. But let's see here. Government shutdown, stock futures fall, dollar weaker. Well, yeah, no duh. You've got federal government shutdown kicked in last night. We'll cast extra attention on this morning's ADP report that showed negative 32,000 positions. Prolonged shutdown could also delay the release of the CPI report in mid-October. Wow, I didn't even think about that. It's not just the jobs report Friday that could get delayed. We could also get this CPI report delayed, and the BLS has no leader right now after Trump fired Erica because the job numbers were bad, and the replacement just got fired. SOFR futures are down 5 to 6 basis points on the day. That's a big miss for ADP, the second largest miss in 2 months. But it's worth remembering that this is an index that's subject to some pretty wild swings. This is true. The number for May came in at 29,000, while economists had been projecting 113,000. In June, the median forecast was 98K, and the print was negative 23. The cumulative miss so far this year is negative 376,000. However, it's also notable that the survey is more volatile than expectations. Yes, but even though the doomers are trying to water down the ADP report, what's the trend? The trend of this report is straight down. That's the problem. And when the trend of the report is straight down, it doesn't matter if you're missing, if it's always negative on the expectations, because the warning sign is that the labor market is actually weakening faster than people actually see. That's the problem. When every time we miss to the downside at a larger and larger scale, it's a sign the labor market is deteriorating much faster. And that's risky.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
Chip stocks lead pre-market declines. Fine. All right. Let's see if usually Zero Hedge has good pieces on this as well. No, the stunning math behind the AI vendor financing circle jerk. That's a great line. Tylenol maker said in an internal email evidence link of autism link starting to feel heavy. There we go. ADP, unexpectedly crater, worst since March of 2023, below all estimates. Remember, by the way, what the estimates are for the jobs report on Friday, which we won't be getting, unless the government opens up again. But look at the estimates for the jobs report. This is the jobs report Friday. And you can see that these estimates are very bullish. There we go. Let's put the Meet Kevin membership. You know what we should do? We should do the Daddy's Back coupon. There we go. We'll put Daddy's Back coupon code up because that's expiring soon. And then we're going to do a big price increase because probably between this coupon and the next couple weeks, so when this expires in the next couple weeks, we'll have all of our lectures done. They're going to be really good money saving and productivity lectures in the courses. Totally for free for existing members too. But anyway, change in non-farm payrolls. Take a look at this. These are the expectations for Fridays. Everybody's bullish. Remember how on Monday and Sunday I talked about this and I'm like, guys, everyone is bullish on these numbers. This sets up for a risk that we're going to get a downside, a miss to the downside, and nobody's going to be prepared for it. I always like trading the opposite of consensus. Because as soon as everybody thinks that, this is going to be great, this is going to verify our soft landing, the opposite usually happens. Again, I actually think now this ADP report puts more pressure on the jobs report, which is delayed, but it actually has a chance of putting more pressure on Donnie T. Right? Donnie T might now be motivated to get the BLS jobs report out, but I guess it's predicated on whether he thinks the jobs report is going to be good or not. And he's going to get the phone call. So think about this. And this is a trading tip. If Donald Trump is really anxious to get the government reopened, the jobs report is probably good. If Donald Trump, the Friday jobs report, right? If Donald Trump is really let's sandbag this for 30, 40 days, he's hiding the BLS jobs data without a doubt while firing and rejiggering people. I wouldn't be surprised if he starts going through and actually starts firing more people at the Bureau of Labor Statistics as well, just as sort of in a lash out. Anyway, 10-year Treasury now down 5 bips. Again, I think the market function today is very soft. This is a very sort of benign reaction so far. But I think this reaction will continue to get more aggressive and build over time. It's gonna I don't even think people are awake yet. The ADP report is always so early when it comes out. And let's see here. Data adjustment, Treasury surge after ADP reports, weakness. Democrats and Trump grapple for edge as government shutdown begins. Yeah, no kidding. Democrats are desperate to show their voters that they have a spine. Well, that's in part because we really don't have a leader in the Democratic Party. Watch my Mamdani video yesterday. That was a very good video. Highly encourage you watch the Mamdani video. Politics are at the heart of funding. The shutdown also creates a role reversal for Democrats versus Republicans. Democratic leaders Schumer and Jeffries are framing the fight as a clash over health care. Donald Trump labels it as hostage-taking to fund illegals. So just remember where that comes from. ACA extension money does not go to illegals. Medicaid funding does not go to illegals. However, some Medicaid funding in California, to California's program called Medi-Cal, does go to illegals because dumbnut Newsom doesn't check anybody's legality before handing out money. Because, well, Newsom's a dumbnut. That said, California is a donor state. They pay more to the federal government than they take from the federal government. That does still give Trump some ammunition to argue that he has some correctness, some factual correctness there, and saying that at least some money goes to illegals, but it's not all of it. It's probably a very, very small fraction of it, but whatever. Okay, looking at other takes or comments here. Let's see what some of y'all are saying in the comments here. We've got average employee makes 130K just to do nothing. Well, that's bearish the economy. How is the market not coming straight down after such a bad report? Because people are discounting ADP. They're looking at ADP and they're going, oh, that's just because it's catching up on the QCEW revisions. It's not, though, because if you add the 44,000 to the negative 32,000, you'll be at 11,000 jobs, which is still way slower than the 50,000 expectation. But that's why I say it's going to take time for this market to fully price this in. Somebody writes, Zorhan is Kevin's daddy. All right, well, daddy's back, so go to meetkevin.com and use the coupon code. People with limited knowledge of the size of the Fed government is insane. It's only about 1% and people want to reduce it. Well, yeah, I mean, as a total of the workforce, yes. When I say that, there are conservatives who want a smaller federal government, they even think that 1% is too large because the idea, even though you had that fantastic interview by NPR of a Doge employee who was a Trump and Elon Musk disciple, big fanboy. He's like, dude, I was expecting easier wins going into the federal government. Like, this is actually surprisingly somewhat efficient because when the government acts, it has to be right. So that was interesting. Does Trump revalue gold and treasury during shutdown and Frin? Oh, man. I don't think he's going to do something radical like that, but he'll be firing a lot. Somebody here writes, labor market is dead. Debt levels for consumers so high. Car loans, student loans, FHA is the new subprime. Watch out. Wow. Yikes. Tom from MySpace says, hi, Kevin, I'm up. Tom is on the watch. What's up? Somebody else says, takes years for factories to be built. Of course. That's why you're getting retooling right now, and because it takes years, nobody actually wants to build the factories, because if you build the factories, as soon as your factory is done, Trump will be out of office. And then Trump's out of office, and then guess what? The tariffs will go. They'll be gone. Somebody here says, thinking VIX calls. Just be careful on how rapidly you try to go. I've been telling course members, like, we're going red this week. Like, don't buy short-term calls. I know you said VIX calls. But I'm just separately talking about what we talked about with the Alpha report. So remember, every day before the markets open, we do a Meet Kevin Alpha report, where I send you what I think's happening, what the trends are, what the lines are, what the trade setups are for the day, what to watch for, how to react to certain news at a certain time. And so we come up with a playbook. It's not always right, but it's been doing extremely well. People have been loving it. I mean, I think our course member satisfaction is at the highest level that we've seen in years, just because the quality of what we're doing has gotten really good. We've been talking about, like, be careful, like, this is not the week to go calls on the Qs. And, we've had, if you look at sort of like, let's go back here. If we look at the last few days, we've certainly come off of peak here the last two trading days, and we've been slowly trending down. Well, even though it's not a fall off a cliff, because this is the Monday trade where we talked about it, right? And we got our Tuesday trade, and now we're going into Wednesday trade. So this is, because last week, it was a different story. But here we're like, hey, we're probably going to trend down. But even if you trend sideways and you got bullish call options for Friday, you're kind of screwed, right? You need an uptrend. And that's why I was saying, don't go bullish options this week. Like if you're looking for options, go out. I gave a date, but I said go out further. Not this week, because it's probably going to bleed. And it did. So, those are just the things that we pay attention to. Also, in part because I was convinced we were going to end up having a shutdown, and we did. Because Trump wanted this. Like, the fact that the biggest warning to you was every time you ended up getting a meeting about the shutdown with Trump, who was there? Vote. The fact that Vote was there, spelled, V-O-U-G-H-T, it looks like Vought. The fact that he was there, Project 2025, Grim Reaper Heritage Foundation guy, that was your warning sign that, we were going to have a shutdown. Speaker Johnson says he is praying for a very short shutdown. Schumer reiterates Democrats won't be bullied into passing a bill. The last time the VIX traded at this level, the S&P 500 was 250 points lower. Not that big of a deal. So let's see here. Look at this chart. This is an interesting one. This is back to the Reddit story. Apparently, GPT's usage of Reddit has plummeted. Probably because, the reliability isn't perfect on Reddit. Anyway, okay. Johnson going to talk to Schumer and Senate Democrats today. All right, well, that'll create some enthusiasm. But I love this chart that Zero Hedge is throwing up. Look at this. Here's a great chart that shows you the magnitude of the red over here. The last time we got this red was during the banking crisis over here. And you could see what's happening with the trend here, right? We just had, a revision down on the prior read. This prior read was 54,000. It got revised down to negative. And this report was supposed to come in at 50,000. We were supposed to have both of these lines up here to indicate like, okay, the pain is over. We're going to soft land and boom. Both of them down. Private labor report here, right? So that's not great, but good visual representation here. And then here are the expectations. This is exactly the same kind of chart that I was showing you for the BLS report. The BLS report, which if you go into the Meet Kevin app, remember, if you want my data, not our stock financial analysis, because that is only for course members, but it's also in the Meet Kevin app. But if you go to the download the Meet Kevin app, which is free, you can get this data. And this is what I put up regarding the Friday jobs report. You can see that bullishness and then compare that here. This is a 6 sigma miss. This is more of a miss than Vlad's 5 sigma miss. Look at where the Economist expectations were. The reality here is this isn't just about the QCW revisions. It's the fact of the matter that economists believe J-Pow when he says, it's just because of immigration. I think people are like literally trying to do the monkey see no evil, monkey hear no evil. That's why Trump fires anybody who gives bad data. Because nobody wants to believe that the labor market is actually weakening worse than it actually is. And that's, or than we're pricing in. Yeah. Far below the lowest estimate. This was a 6 sigma miss to estimates. The lowest estimate we had was 25,000. Even if you add positive 25,000, even if you add back in the revision they minused, you're still only at 11,000. You still missed the lowest estimate. It's crazy. Somebody here writes, we are normalizing the Beveridge curve. Yes, we are. A lot of people don't know what that is. I will gladly give a quick breakdown of the Beveridge curve again, spelled Beveridge curve, but I guess pronounced Beveridge curve. So the Beveridge curve is very interesting. The Beveridge curve is basically a way of saying that when you have low job openings, you should have high unemployment. So think about it like a downward half pipe, that's going down like this, okay? So it's a downward slope. So the lower job openings, the more unemployment, right? That's how the curve works. Here's a picture of it. Wow, I got it in the Meet Kevin app. Available for free at, just type in Meet Kevin in your Android or Apple App Store. But this is a normal curve. We're not normal. Do you know where we sit right now? We sit right here. It's not charted, but we sit over here. Job openings, the job openings rate is terrible, and our unemployment rate is low. This is very abnormal. The curve historically always normalizes, which means our unemployment rate at job openings this low should be somewhere around 9% right now. And when that happens, we are going to go back to a zero interest rate policy. So with the ADP revisions, it's abundantly clear that Trump was correct to call for Powell to go for cuts sooner. Yes, that's actually what I've mentioned many times, that Donald Trump will, whether it's through sheer luck or irony, end up being correct. That is exactly what I have said. It's the same irony that I said in 2022, wouldn't it be funny if Biden gets saddled with all the inflation and Trump comes back in 2024 and inflation is lower, and then Trump cheers how inflation was low first term and low second term and only high under Biden. Oh wow, fate loves irony. It's exactly what happened. So yeah, not because I think like he had any kind of, foresight into us going into recession. I think Trump is just a businessman and wants lower rates, and he wants the economy to boom hot because he wants the biggest numbers. I think it's more of an ego and business play than it is, I think we're going into recession for Trump. That said, that will appear to be correct. You hear anything about stimulus checks? Donald Trump has talked about stimmy checks for farmers at this point. The last time they gave stimmy checks to farmers, they were worth about $22,000 per farmer on average. That's on average, so, obviously it skews to the larger companies. Let's see here. This secures another cut, maybe even deeper cuts. It depends, because if we get the jobs report, like the actual Bureau of Labor Statistics report right before the Fed meeting, let's say when the government reopens up, if we get the actual jobs report and it's like somehow really positive, people are just going to forget about the ADP report. But I do think the ADP report, which is a private survey of 40 million employees, is a really good proxy for what's going on. So, it's a big deal. Just like how you could use coupon code Daddy'sBack at meetkevin.com. Remember, you get lifetime access. In fact, some say that once you join, you don't even hear the pitch anymore. So it's like auto skip on the Meet Kevin membership pitch. I kid. Anyway, okay, so we'll see what happens here. This is a crappy jobs report. This is not what we want, and it comes at a really bad time because it's such a bad report that we would want to offset this with the Bureau of Labor Statistics real data. Well, it's also fake data, but, people put more weight on it on Friday. But if we stay shut down, we ain't getting the jobs report on Friday. So it's going to be a very interesting wrap up to the week over here. And then also note, I need to update this banner. Webull is now doing a 3 and 4% deposit match. So if you go to meetkevin.com, 3 to 4% deposit match. It's crazy. It's 4% if you're transferring over 100K. 4% deposit match. Really insane. Get paid to transfer over to Webull, which is always where I look at the line. And so far, the Qs don't give a flying F. They are chugging along. This sell-off right here was because of the shutdown. Now the Qs going up. Now, what we're going to do is we're going to go into the course member live stream right now. I'm going to grab my coffee. We're going to go to the course member live stream. We're going to set up our Meet Kevin Alpha report. This is what we do. We go live. We do our Meet Kevin Alpha report, and we prep for trades for the day. Perspective. Here's what we think's going on. Here's what we see in the options market. You get lifetime access to that at the Meet Kevin membership, meetkevin.com. And then we'll do fundamental analysis. Sometimes we do real estate analysis for people. Other times, most of the time, we do stock analysis. So we'll go through Nike earnings in detail or whatever, do projections on companies. So very excited about it. So anyway, thank you so much. I'm going to get my coffee. I'm going to run on over to the course member live stream and the Meet Kevin Alpha report. Use coupon code Daddy'sBack at meetkevin.com. This is a shocker report.